good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Ajay Sharma. There was a bit of a scare on our intraday basis when we did slip below the mark of 22,000, but we have recovered that ground. At least we're holding on to that 22,000 mark. Bank Nifty too slipped into the red for most part of the trading session. Bank Nifty has actually been outperforming, but for now it's seeing a slide of almost 80 points, and the culprit can be called Federal Bank right now, because post the earnings wherein the asset quality worsened a bit, that stock has taken a bit of a knock. So Federal Bank sitting with a cut of around 3.5%. We should pull up the intraday chart of that one. And to add to that, there's incremental news flow on the entire financial space, as Citi has come out with a fresh note, and there's a big downgrade coming in on SBI, and that's the key talking point in the market right now. They've downgraded it all the way to a sell with a target price of $600. Federal Bank, of course, has been downgraded to sell as well. You have a downgrade coming in on M&M Financials. However, it's Bajaj Finance which has been upgraded, Chola Financial has been upgraded, and private banks is where the preference lie. So there's a clear shift happening away from the PSU banks and the banks which have run up to the names like Bajaj Finance, Chola Finance, and private banks now.
You know, I'll tell you something about Federal Bank, which you may have not paid attention probably. In the numbers, no, the part which actually is leading to the slight bump up in NPA, the management just clarified that this is only a 1 quarter matter.
Okay.
So in the coming quarter, which is the Q4, this thing will be added back or reversed because things have turned around. So if you are shorting that stock only based on this, please be aware. Yes, there is a downgrade which has come in, which Anisha was alluding to, but that's on a bigger issue. This bump up in NPA is only because one particular account had become troublesome, and the management, at least one of the executive directors I was speaking to right now, Yash Dheer, he was alluding that it is only a 1 quarter matter, it will be reversed. The other part is, today the weakness which set in actually was also because after 4 days of one-sided rally in Reliance, today Reliance is not participating. Pull up the Reliance chart and you would see that's trading with the cut, or almost that's Federal Bank for you. Let's see if it actually recovers. We'll discuss that issue and get you a bite also. We spoke to Shyam Srinivasan and we'll come back on that one. But Reliance is not participating and is weighing in as far as the Nifty goes. Federal Bank, of course, on the Bank Nifty. But some other names will come up on your screen. Metal counters are doing okay. What is interesting today is that small cap and mid caps are also not participating. They're slightly on the weaker side. Metal stocks, the reason metal stocks are actually rebound is because there is a whisper of stimulus which is coming from China. I mean, it was being spoken about, now it's being announced. So that is leading to some nice short covering or triggering a rally as far as metal counters are concerned. Well, we'll go to our guests now. We've got Shivani Sarkar joining us. Kunal is also here. And Nuresh is back from his holiday. Nuresh, were you holidaying? You weren't there on the channel a few days. Where were you?
The wedding season kept me busy.
Are people, are fellow Indians spending, splurging on their weddings? What were your observations?
There are so many functions to go through. That's a pain.
Okay, fine. Let's talk about markets and Kunal. There was an intraday dip, but the beauty of bull market reversals are that they get equally bought into. Is this one also bought into in your view?
Yeah, it looks like, and the dip was a lot more shallow than the previous dips for the index. Just about 120 points off for the Nifty. So from 20 to 100, there was a touch and go movement below the 22,000 mark for the Nifty, but I think we've managed to come back quite okay. The only catch with today's sell-off, which was not the case seen in the last two previous corrections, intraday corrections for the index, is that for a moment the Nifty futures went into discount. Now that's the only concerning point for an index trader, because generally when futures reduce their premium or drop down their premium and get into a discount at the start of maybe a corrective wave, that generally is an indication that maybe traders are expecting that this could be a plateaued region or a point where the index can get a lot more plateaued from here on. So if the index premiums doesn't improve over the next couple of days, then we may expect that this intraday bout of volatility may continue for the next couple of days, and possibly this 22,000 mark could act as a pivot for the Nifty.
Okay, point taken. Actually, pull up the intraday chart of PNB Housing. Not sure what suddenly happened on that counter, but that surged almost 10%. So let's take a look at that one. definitely building on volumes as well as price right now. And of course, Capri Global has been trending higher throughout the trading session. And as Ajay was pointing out, it's the metals pack, not just the frontline names, but take a look at a Maharashtra Seamless. That's perking up. Sale is also higher. NMDC and a lot many other names from the metal packs are fairly excited. Nuresh, if I can come to you quickly on the charts of PNB Housing, if you can explain the move to us there, and from the metals pack, which is the chart that looks the strongest.
So PNB Housing has given a breakout, but the fact is it has moved up really fast. Not expected to fire up to 8 to 10% in the day. But the trend is strong. The stock is back to the prices where it was in 2021. So positive. Any dips back to 850 odd levels would be a buying opportunity. 850 to 830 zones. In terms of metals, the trend has been strong, but names like Nalco sale become difficult to trade given that they keep going into the derivative band. But NMDC remains one of the better names. We've seen mining plays do better than the steel and aluminum names. So NMDC corrected from 225 odd to 210 odd levels has started making a recovery. So NMDC is the first pick. Secondly would be Jindal Steel, which is now getting close again to a new all-time high. Close to a flag breakout above 755, 760 levels. So this would be the two top bets in the metal trade.
So Shibani, I want to understand your thought process on metal counters. Steel as well as say Hindalco, Nalco, etc. I was talking to one of your fellow fund managers when I asked him what are your thoughts on metal counters here, and he said, which metal counters? We are just converters. We are not really metal and mining companies the way there are globally, right? So, I mean, he was presenting a contra view of being bullish on it, but the general view is that with China and US being in such shape, weak economic shape, the metal sector may not do well. Where do you stand on metal?
Hi, good afternoon. So on metals, we have been cautious and we have been underweight on the sector. As you are rightly pointing out, the sector is prone to very high cyclicality, and a lot depends on how global demand really pans out. Now, while we have been, getting this news flow of the possibility of some sort of stimulus to improve demand in China, that has not really come through. And post the opening up, what we have seen is clearly demand from China has been weak. One of the biggest segments that contributes to global demand, especially for steel, is the housing sector. And our belief is that at this point in time, the housing sector weakness in China continues. And from that perspective, if you look at the demand supply imbalance at this point, and given that global demand remains muted, we believe that metals in the near term will see cyclicality and will see pressure, especially in terms of pricing. Now, within the ferrous and the non-ferrous pack, if you take a slightly longer term structural view and look at demand supply dynamics, non-ferrous does appear to be somewhat better than ferrous. But overall, in our portfolios for commodities and metals as a pack, we continue to remain cautious and underweight, given that there is still no visibility of demand recovery globally.
Sector which is coming under pressure today is this entire stock market intermediaries. Case in point being Angel One, which is of course a result reaction coming in. But take a look at Nuvama Wealth Management as well. That's taken a knock. Motilal Oswal is actually trending lower. And a lot many names from these segments are actually on the downside. Shibani, you are very close to this sector as well. Talk to me how this entire financialization of savings and the stock market related names, whether a CDSL, whether a KFIN and Prudent of the world, there are a lot of ways to play this. But what's your take as to which are the top bets that one should look at in this sector?
Without getting into specific names within the space, what we have seen structurally is that the trend of financialization of savings in India has seen improvement, but we still have a long way to go, given that penetration levels are still fairly low. So across the board, our belief is that the runway for growth and penetration means that their opportunity set in the medium to long term remains fairly intact. However, given the fact that markets have seen this sharp up move and therefore the capital market related plays have also seen a similar sort of movement, one should also therefore be mindful of valuations in the near term. And it's possible that, given the kind of up move and the valuations that some of these entities are trading at today, there could be some degree of consolidation. But the longer term structural theme of under penetration, financialization of savings, and also maybe to some extent shift in market share in segments such as brokerages, for instance, where there is consolidation taking place, means that this over the medium to long term, this could be a structural theme that stays intact.
There's a very interesting note by a brokerage today taking examples of some of the companies they think actually could be the first $1 trillion company in market cap in India. It talks about a large private sector bank. It talks about an energy to financial services conglomerate. It talks about a pure consumer lending company based out of Pune and a few others. Because it's a 7-year view, I'm taking a liberty that to talk about companies which you think can classify to reach the $1 trillion market cap in the next 8 years actually, 8 years. Or do you, if you still don't wish to talk about names, then can you tell us the nature? Will it be a bank? Will it be a large NBFC or a energy led conglomerate? What do you think will be the first $1 trillion MCAP company in India?
So I think interesting question. In my view, as we were discussing in the previous question, in terms of financialization of savings, there are a few key things that we believe that is very, very structural from a financial services perspective, and therefore it is very possible that this is a sector which, from a medium to long term, could see a significant creation of market capitalization, without, of course, going into particular names. A few things that we see, if you look at penetration levels, even in terms of credit to GDP ratios, penetration levels, in terms of the various financial services plays that are there, the very fact that we still remain fairly underpenetrated means that there is a long runway for growth. Secondly, what we have seen is in this sector, with use of technology, there is also significant operating efficiencies that are coming into play. We are also, in our belief, at the cusp of start of a private sector capex cycle, which should also bode well for long-term loan growth where the sector is concerned. And therefore, if you take a view of, say, over the next decade or so, financial services, banking as a space is something that will possibly be a sector, a thematic sector to look out for over the next decade.
Point taken. Just going back in terms of which are the stocks which are actually slipping in the trading session, CE Infosystems just came out with its earnings. Looks like the street is not very excited by the performance that the company has reported, because that's taking a bit of a slide. Let's pull up the stock of CE Infosystems, because that stock is taking a bit of a knock. You also have Jubilant Life, Jubilant Ingrevia, Federal Bank. These are some of the counters which are slipping in the trading session. In fact, just going back to that City note, Kunal, there's a very interesting move that they have done in terms of the 90-day catalyst watch that they've opened. It's a negative catalyst watch on SBI. They're expecting a bit of a downside there, and Federal Bank has been downgraded. But if you look at the charts, what does it suggest? Is SBI looking weak for the next, let's say, 60 days?
No, in fact, my belief is that many of these PSU banking stocks, the mid-cap end specifically, is getting ripe for a breakout. Now, see, what could happen is that maybe SBI may not perform, or it could remain sideways. Charts are so far not weak. The stock has gone through its own time-wise correction. I think the December high for the stock was around 660 mark. The recent low was around 620. So it's gone through its own patch of correction/consolidation. Now with the entire gamut of the PSU banking names, the mid caps and the small caps, specifically the two-digit stocks, they are the ones which are looking attractive for a breakout. Many of them have seen volume participation. So I believe that possibly SBI can also see maybe a slight comeback, maybe towards 650, 660 mark. But in case if the stock actually dips down to that 620 levels, if it happens in the next couple of days, I think that's going to be a very good buying opportunity from a contra perspective.
Okay, point noted. So at least on the charts, it's not looking weak. In fact, a lot of mid-cap PSUs might be something that might come back into flavor. But time now to slip into a very short break. Don't go anywhere.
Okay, back with our panelists to discuss. There's some recovery on an intraday basis being attempted. Let's see where we end the day. Shibani, what are your thoughts on the way QSR stocks are doing last few months, and after they went through a very bad patch? But what I observed, Shibani, was that be it Devyani, Restaurant Brands Asia, or some others as well, they may have gone through a weak patch in their growth, but they did not slow down their store count addition in a very meaningful manner. In fact, they pressed against it, right? Is it right to assume that this was a temporary weak patch and in the structural story for QSR in India is still intact?
Yeah, so I'm of the camp which believes that the structural story for QSR in India is indeed intact. However, what we have seen is that overall there has been some amount of slowdown that we have seen where discretionary spends are concerned. Also, we went through in the last quarter two large events that were there, especially with the World Cup in play. And therefore, a lot of while, on one hand, there was improvement where food deliveries were concerned, the in restaurant dining had taken an impact. So overall, what we have been seeing is the outcome of slowdown where discretionary spends are concerned, especially at the mass, rural, or the tier two kind of segments, which has impacted these QSR players. However, from a structural perspective, what we believe is that over maybe the next few years, the entire penetration levels, as we at least try to move down the curve, especially where tier two, tier three cities are concerned, the structural story is intact. And therefore, obviously keeping valuations in mind, one could possibly look at some of these, at this particular sector. One factor that we must note is that while there is signs of improvement at the mass or at the discretionary spends level, the signs of improvement are extremely muted. So it's not a V-shaped recovery that is taking place. So it's going to be a slow and steady recovery. And therefore, one would have to be patient where this entire sector is concerned.
Patient, that's what you'll have to be in the QSR space. But the nature of the gains on the IPO market have also changed quite a bit. Just a couple of months ago, we were seeing surge of 50, 100% on the listing itself. Now, listing is a bit more tempered and the actual gains happen post that. Case in point being, Jyoti CNC, it listed at the price of 372 versus the issue price of 331. But now that stock is surging and we are seeing that trading around 437. We'll discuss that more, but first listen into what the management had to tell us about the future, because from a 15 crore profitability what they delivered in FY23, they are right to grow their business on a multifold basis, and that's why the overall profitability is also expected to jump going forward. On the valuations as well, the stock is pretty much in line to slightly cheaper.
So what will happen is that, okay, let's hear out the management. We'll come back and tell you what exactly is happening in that story.
See the going. So based on this, our order book today, our EMS orders are close to 8%, and aerospace and defense are close to 58% in our order book. In terms of a revenue, in terms of execution, we are looking to be a close to 40% is going to be aerospace and defense, and it is going to be balanced between the three things are like that: auto components, EMS, and aerospace and defense there.
Rajkot-based company believes that in the next coming years, the profitability of the company can grow many folds, and that is why one section of the street saw value in it. On listing, they started buying, and from almost 370 odd, we are talking about 470. But what is also happening, Anisha, is that this entire, actually Azad Engineering broke the speculator HNI's romance with grey market. Because when you take a position on a grey market and the grey market plus the issue price position doesn't go up, and then there's a loss which the investor actually makes. And there was a massive one in Azad Engineering. And after that, people are not participating a whole lot in grey market. They want the stock to list, then work the numbers and see. Similarly, Credo and even RVZ actually saw hardly any action in grey market, but after that the action. So this is good actually, one takes a more informed call. But I'd like to talk to you about another stock, Nuresh, because you track small caps clearly. Power Mech. This is also the same Rajkot-based CNC company, and there was a big run-up in Power Mech at the time when this company was doing road shows and all. The Jyoti CNC stock. Power Mech is 25% in 3 months at 4,900 odd. How do you look at the charts of this one?
So technically the stock is positive. If you look at the previous all-time highs, the stock made in August was closer to 5,000, 5,100. Then for the last 3-4 months, the high was around 4,600 to 4,800 levels. So we've crossed above that. The momentum is strong. The only case is one will have to keep a deeper stop loss at 4,600. So sustaining that 5,000, 5,100 mark would imply an all-time high. So in that case, it could see further momentum. Just that you would want to buy it on a dip. At current levels, the risk reward is not as great.
Reward is not as great for PowerMech, but do remember the stock has run up 22% within 3 months itself. Kunal, I want your view on the charts of ITC as well as LIC, because LIC is now getting very close to that issue price of around 910 bucks, or closer to that level, whatever it was, because there was some discount for employees, etc. as well. But what's your take on LIC and ITC?
I think for LIC specifically, I think it's an exceptional jump of volumes. And from that 600 mark or sub 600 levels, you look at the average volume texture. It's almost like on an average, we've seen volumes for LIC on daily basis to be around 50 lakhs to 60 lakhs on the NSE. And the volumes prior to that was 5 lakhs, 4 lakhs for LIC. And I'm talking of it for weeks when the stock was below that 600 mark or at that 550 level. So that itself tells you the change of stance which has happened for LIC, and especially that pushback from that 600 levels towards a point when the stock is almost at this 900 mark. Today's move specifically for LIC, again on exceptional volumes, almost 1.15 CR of volumes today for the stock on the daily charts on the NSE itself indicates that this is a strong volume back move. And we've seen this phenomena for PSU names, that whenever the move has been backed by volumes, whether it's the likes of PFC, REC, of course, different sectors altogether, but then these moves sustain, they build, and then they eventually go into multi-month, multi-year uptrend. So, of course, the chart patterns for LIC chart history is limited, so difficult to forecast from a longer-term play. But at least looking at the last 3-4 months of charts, expecting that the next 2-3 months, the stock should be at least scaling past about the 4-digit levels.
Wow, finally the investors would be really happy to hear 1,000 rupees mark. For the longest time, the people who invested in the IPO were sitting in huge losses. They're still in losses, and a lot of them have actually thrown in the towel, sold at a loss. But finally, I mean, it seems like it's breaking out.
Well, yeah, I mean, but you can mark it last 2-3 months, the commentary from Deepam's side and even from the LIC that they want to do a YONO kind of a app.
Correct.
Like SBI, and a lot of efficiency related commentary coming in. That's exactly where it bottomed out. But talking of bottoming out, Kunal, there's one stock I want to discuss with you, which appears to be breaking out. At the start of the show, you were offline discussing about it, now 11%. Pratap Snacks. What's happening there? Have they found out or about to launch some specialized variety of
Some new
snacks?
chakna and masala coming
Some chakna and masala, because the street is saying cheers almost on a daily basis.
Well, the last 3 weeks of data suggests that there's something new which is happening to the stock. Again, very good volume price move for Pratap Snacks. The stock, I think, from 900 levels in the last 3 weeks moved up back towards the 1200, 1250 mark. Still off from the previous size, 1458, 1460 is the, I think, 2018-19 high for Pratap Snacks. But just looking at the last 3 weeks of price action move, I would believe that 1400 should be in the making for the stock.
Okay, so 1400 was, this is a troubled company which is trying to attempt a comeback. Shivani, have you looked at this category, not the stock, but there's another one, BKG, which trades at much higher valuation than this one. There's another Gopal Snacks, which is in the IPO almost a month, in a month's time. I want to understand the representation for the snack market is only increasing on the street. Have you looked at this category? Any thoughts?
Yeah, so this category is an interesting category. As you rightly said that the market size for this is increasing, and again given the fact that the consumer sentiment and behavior has also been changing, this is a category which again shows runway for growth. Unfortunately, again, I will not be able to comment on specific names, and it's a pretty small category per se in terms of its representation in the listed universe. But when you look at the segment, one has to look at it vis-a-vis growth as well as valuations. And in pockets, valuations may be stretched, and therefore one has to keep that in mind. But again, as a category, it is an interesting space, and we do believe that the runway for growth in this category is fairly strong.
Way of growth is fairly strong. On that note, we'll let you go, Shivani. Thanks so much for making time and speaking with us. But before we head into a break, let's pull up the intraday chart of HDFC Bank, because that's shown quite a bit of recovery from the lowest point of the trading session. The results are expected anytime now. It's most likely expected to be post-market hours. But clearly, the street seems to be sensing something, because there's an uptick in the volumes, 1.1 crore. And look at that last 15-minute move. There's a big surge happening as far as HDFC Bank is concerned.
Trade which is
clearly
getting
at play.
initiated, yeah.
And then tomorrow there is most likely sell-on news which might pan out. But let's see, for now the street is baking in that there is going to be a strong performance. As far as HDFC Bank is concerned, a lot of the data is already out in terms of the provisional performance. But there's something that the street is clearly sensing. We'll do one thing, we'll take that promised break right now. When we come back, we'll tell you what exactly are the expectations from HDFC Bank. Welcome back. Well, the US market will open after a one-day holiday, and it seems like it's suggesting it's likely to open on the back foot. Dow futures for now is suggesting a downtick of almost 150 points. Nasdaq is down 0.6%. So after a one-day holiday, it seems like for now the cues are more stacked towards the downside for the US markets. We also have Vineet Bulinchka joining us on the show, and Vineet, I wanted to begin by discussing this entire religious tourism theme that we all have been talking about because of the entire, Jan 22nd ceremony at Ayodhya, and the way the entire headlines are right now stacked with what's happening at airlines, the fog-related delays, etc. Despite all of this noise, what would be your view on how one should play this entire tourism theme, whether by aviation or the hospitality sector?
Combination of all three. And just to highlight how the spiritual tourism thing has caught up, is that it is the top 10 destinations for visits to India are all from the spiritual tourism spot. So to that extent, the shift is going from Himachal and Goa towards all these destinations. Having said that, I believe that IRCTC, Indigo, notwithstanding its problems that are created around lot of flack we are getting from the social media, but it is still very low as compared to the other airlines. So I think Indigo, IRCTC, Indian hotels and the other hotel spaces are what we like. Thomas Cook is also one play that we can integrate into this.
Which hotel have you booked for your Ayodhya trip?
Well, I have become a member of Indian Hotels.
Okay, and Indian Hotels doesn't have an operating property yet. Of course, they're planning 2 of them, but of course, till then it will be a bit of an issue. But this, what do you want to say something?
We did speak with the management of IHL today and
Around
understanding their plans
plan.
of what the tourism, this entire religious tourism mean for them. Let's listen into
Sure.
their take as well as to how this entire space is likely to grow.
Ayodhya presents a great opportunity for us to have a significant presence there. And as on date, we have signed 2 hotel contracts, a 100-room Vivanta and a 150-room Ginger. And we see there will be opportunities to take all our brands and across all segments to Ayodhya. 40% of our operating portfolio would be in spiritual destinations or in a location which is maybe an hour's drive from a major pilgrim and religious site. So it is a significant part of our portfolio. In big markets where we see huge growth in spiritual tourism, we are penetrating more into those markets. Like, for example, we are doing another hotel in Nasik. We'll be doing more hotels in Varanasi. And we will also be opening new markets like Puri. We should be opening a Taj soon in Puri.
Okay, so those were the entire hotels that they are likely to open. Not just that, of course, Oyo has a huge plan lined up as well in terms of how they are looking at capitalizing that. Plus, of course, the entire headlines that we're reading on aviation. In fact, let me do one thing. Let me first go across to my colleague Samir to get the latest as to what's happening on this entire Indigo, controversy. Because Ajay, we've all seen that video wherein people were sitting on the tarmac, eating, just waiting for their plane. Not really a very pretty sign.
It was very sad actually, and biting cold. Don't forget biting cold. The tarmac would be freezing. I mean, how would one really sit out there and just look at that? It was very saddening. No food packet, nothing doing.
Yeah,
so, in fact, why don't we go across to our colleague Samir Dikshit, who's following that story. What has happened? What led to such a? I mean, we should give, of course, benefit of doubt. On the other side, there must be some emergency which have occurred. But what exactly was the case, Samir?
Yes, definitely. That's the big development that we are picking up from the Aviation Ministry, that a show cause notice has been issued to Indigo airline as well as to the Mumbai airport for the lapses for not performing their duty properly and also not abiding by the civil aviation or the CAR rules. So the show cause notice clearly mentioned after the video went viral on social media, wherein multiple passengers, they were having their food, they were eating on the tarmac near to the aircraft, and seeking that the Aviation Minister Jyotiraditya Scindia held a meeting at midnight. What we are picking up that at 12:30 a.m. midnight, Minister Scindia held meeting with the ministry officials that what all is happening at Mumbai airport, what sort of lapses is there. So after a detailed meeting, now the BCAS, which is Bureau of Civil Aviation Security, they have issued a show cause notice, and it has been found that both the party, the Mumbai airport as well as Indigo airline, they did not perform their duty as per the rules. The rules clearly mention that if the passengers are affected, then proper facilitation has to be done, proper arrangements have to be done for the passengers. Moreover, the aircraft should not be parked to that place. It should be parked at the stand-up area. So there are multiple rules which were not followed. These are the major points that were raised in the show cause notice. And the big point is that now the Indigo as well as Mumbai airport, they have to reply to this show cause notice by today itself, by 16th of January. And if the reply is not sent, or if the reply is not satisfactory, then this may attract enforcement action from the government side, and also financial penalty may be levied on both the parties. So this clearly seems that the government is not happy with these, whether it be the airport operator or with the airline, the way they are functioning. Also, when at a time we have seen that thousands of passengers, they are affected, especially in North India, because of the flight delay, because of the bad performance of the airline. So government, or precisely if I may speak,
Sure. Point taken, Sameer. Thanks so much for clarifying that. And of course, Indigo too has issued a reply to that they've already initiated an internal inquiry for the same. But Vineet, wanted to come back to you and discuss HDFC Bank. The numbers are expected today, and we'll play the expectations for our viewers on the screen. But what are the things you are watching out for in the earnings and the commentary, which might at least suggest a bit of a turnaround?
So I'd be watching to see whether the NIMs remain flat, number one. Number two, we'd be watching the CASA ratio, how it is playing out. And the third thing is what we'll be watching for is not too much of a disruption in the NPA, or the NPAs do not go up significantly. If all these three criteria are met, we can well say that HDFC Bank is well set for a Q4 back to growth trajectory of around 17 to 18%, which was the historical growth rate of the last couple of years.
Vineet, what are your thoughts on Federal Bank? If you look at the Federal Bank last 1 month, it has kind of given up say 10%, and of course maybe expectation of some asset quality pressures which were reflected in this quarter, but the categorical there was a comment coming in from the management that this asset quality pressure was due to one particular client which will be reversed in the coming quarter. In fact, a month back they had given out a detailed kind of a presentation, a strategic one, indicating how ROE and ROA expansion is the focus and pan-India expansion. So in this light, what they are attempting a transformation of sorts, would you buy it at 149 odd?
There is a little concern because HDFC has been crowding out all the deposits in the markets. And, so we expect a slight increase in the cost of funds, which would, kind of dilute the NIMs. Taking this into consideration and their commentary on NPAs, if they are able, when the numbers are out, and if the NPAs have kind of rebound as they have said, then I would look to buy the stock. But I'm more comfortable buying a Maharashtra Bank or buying a Karnataka Bank in favor of Federal Bank.
Federal Bank numbers did actually come out. There was a slight worsening of the net NPA to that was the gross NPA figure, 2.29% versus 2.26. The net NPA, of course, was 0.64%. But overall, listening to what the management commentary is regarding what's the explanation of this asset quality worsening, if it is temporary, and what's the target for return on asset ratio?
24 looks like on course on all the key metrics the bank has been seeking to work on. It is a tight market for all players, we've held out quite well. And I do believe this momentum of ROA and ROE expansion should continue as we look into either the last quarter of this financial year and or the next financial year. The CAGR for federal has been well north of 15 to 16% across an eight-year period. To back COVID out, it's probably 18% odd. And if you look at the industry, it's grown in the 12, 13%. So we are at what, 500 basis points to 600 basis points higher than the industry growth, which in some sense is the number that you are also pointing out to be. And I do think that momentum is there. If you take the last 6 quarters, it's been 18% plus. There is caution to banks are being advised to be more thoughtful about credit expansion when the weather is sort of rough in some parts. So anything to expect 16 to 20% growth through this period is very possible. So to expect federal to be doubling over the next 4 years, I think is quite on course. It's on almost exactly what our internal aspirations and our commitment to our board and our ourselves is. So doubling the bank over the next 4 years should be very possible.
Okay, so let's move on from the banking space and talk about consumer durables. Look at Blue Star in the last 3 months. Look at Voltas, which is knocking at 1100 now, coming back from almost 800 odd. Vineet, what are your thoughts on the way in the last 3 months these consumer durable companies, and even Amber for that matter, the manufacturer of air conditioners and washing machines, has come back smartly in the last 3 months? Do you think the bottom is in place for this category and it can do well from here on?
So, I think that, the discretionary spending power is coming back to the rural markets. And we are seeing this play out in the form of, the increase in the consumer durables thing. So I would definitely wager that, it would be a very, very good bottom that is in place considering these equipments, consumer durable manufacturers. And here we think that Blue Star and Hitachi can do very well going ahead.
Actually, let's pull up the intraday chart of Symphony as well if we are talking about that space, because Symphony is actually perking up in the last few minutes. It's seeing a bit of a vertical move at that. In fact, a lot of these banking names also, the smaller ones, a Yes Bank for instance, a South Indian Bank for instance, a J&K Bank for instance, they are all seeing quite a bit of uptick in the last few minutes, so definitely gaining ground. Naresh, if I had to come to you and ask you about some of these smaller banks, the ones that I named, Yes Bank, J&K Bank, South Indian Bank, is there anything that you would want to take a bet on?
Bank would be one which is that has been slowly and steadily trending up over the last 6 months and continues to do a relative outperformance. So that is one. Yes Bank is something which is on radar, but it's a stock where the risk is pretty high. But the thing to look out for is the stock has crossed a 3-year high. So the last time the stock was at around 26 was back in 2021 and 2022 end. So that could surprise on the way up. But I would go with names like Bank of Maharashtra on the smaller side, PNB on the smaller side, instead of going into Yes Bank.
So Bank of Maharashtra as well as PNB. These are the two top bets coming in from the race. But gentlemen, hold your thoughts. Let's now go across to my colleague Sharad. He's been standing by to tell us what the chatter today is like in the dealing rooms. Hi Sharad.
Well, yes, the khabar in the street is footwear stocks are in focus, such as Mirza International, Metro Brands, Relaxo Footwear, and even Khadim. Now, important thing is that the BIS standards implementation in certain footwear categories, they have been actually extended to the month of July 2024. Now, earlier this extension was supposed to be ending in the month of January, but now the BS implementation has been shifted. Now, actually, of course, this actually would help the footwear stocks, especially as the government could actually give this further extension to liquidate the existing BIS compliant inventory, and that would be actually auguring well for the footwear stocks. But overall, if you look at it, the Q3 numbers might be looking a bit muted because of fall in the consumer discretionary expenses as well. But overall, it looks like the inventory sell can actually be a proper trigger going ahead for the footwear stocks.
Footwear stocks are interesting. Some of these names, Campus, etc., had come at very elevated valuation and went through a big time correction of sorts. Vineet, do you like this space, footwear? Any names there?
I think I'm not a very gung-ho on this space as much as I would be gung-ho on the apparel space. I think there's a little too much of a crowd out there and would wait for some of them to really establish leadership, gain market share, and then maybe have a look at them. Though Khadim seems to be very cheap on a EV by EBITDA basis, but it's always been a laggard.
There's one stock I want to discuss very quickly with you, which is ITC. The flashes coming on the screen was suggesting that ITC, the stock has shot up 1%. That GQG, Rajiv Jain has added about a large position, some crore share, couple of crore shares, 15 crore shares in Q3 versus Q2. At 472, the one doubling happened between 180 to almost 450 on that pretext of the demerger of the hotel business. Do you think that, and then went through a big time correction? The second journey, does it appear to be starting now, Vineet, in ITC?
Definitely, I think that ITC will do well. So, they've gained critical mass in the FMCG segment. Hotels are really doing well. Cigarette volumes are up. There is no GST pressure. So, all the price hikes that they take go to the bottom line. And the paper industry is on a roll. So, I think all the engines are firing. EBITDA margins are improving for the consumer business. And hence, we think that definitely there's a lot of scope for ITC to go up.
Sure. So ITC definitely in focus, but Vineet, you have been looking at a lot of these small cap companies which have the potential to become mid caps and then eventually large caps. You did spot a couple of those interesting, electronics retailer for us earlier. Which are the other stocks recently that you have got on your radar?
So we have been looking at Aegis Industries, Aegis Chemicals, which is the storage arm for chemicals as well as for liquids as well as LPG. And we believe that this is one company which has got absolutely top class management. They have got a perfected business model, and the growth factors are very high out here. So we believe that this represents a very good proxy for the infrastructure sector. And to my mind, I think this company will continuously keep doing well. The other company that we like, which we think from a mid cap or a small cap can become bigger, is KFin. KFin has got several models, growth engines, which are more overseas than in India. So they're looking for acquisitions overseas. And if they get one of these acquisitions, I think it can snowball into a very large business. Because, internationally, business is done at around 19 to 20 bips. In India, you barely get 3 bips, and they're looking at 6 bips for overseas operations. So if that comes through, they will have a swing in market share. And that is one critical factor that we should be watching out for.
Two gems coming in from Vineet Bulinjkar, Aegis Logistics, the stock in focus, as well as KFin Technologies. These two are the names which have the potential to become some multi-baggers as well. But Naresh, let me come back to you and discuss a few more stocks which are buzzing around from the metals pack. MOIL, for instance, is higher now by 9%. Bit of a ancillary to it. Gravita India is also up around 6%. MSTC has again come on the radar today, 6% higher. Any name you're watching out for from these 2-3 names that I talked about?
So MOIL is the name which I am looking at, because that's a stock which has trended well, and we've seen the whole mining space do well out here after the initial bump up from 170 to 320. In the last 1 month, the stock consolidated around 305 to 325 levels, making a classical bullish flag formation. And today we've seen a breakout, and in such a case, the breakout should take it towards the 400 mark next. So that's the one I would be watching out for. And going back in 2018, the stock had made a top around 280. So overall, looks like a fresh trend for the stock after almost 5-6 years now.
Strength for MOIL after 5-6 years. But what about Asian Paints? The company will report its earnings tomorrow. But what is the street expecting, Lisa?
Right, so Asian Paint is expected to report their results tomorrow, and the revenue growth that is expected to come at around 8% on year-on-year basis. That is mainly driven by the delayed festive as well as the wedding season, which was seen, as well as the low base which was seen last year. Now, talking about the demand was stronger in October as well as November, but December that saw some muted number. Talking about the volume, that grew at that is expected to grow at around 10% on year-on-year basis, but value growth is expected to be lower than the volume growth, and that is because the product mix that is mainly skewed towards the economy as well as the putty segment. Now, margin expansion is expected to be seen at around 21% versus 18.7% seen last year, and that is because of the softer raw material prices. Remember, crude oil as well as titanium dioxide, they are the main inputs for the paint companies, and that is expected, that has seen a softening in the prices. But margin expansion is also expected to be offset by the higher ad spends, which was mentioned by the management of Asian Paints last time. Now, the key monitorables or the key factors to watch out for will be the Grasim's entry in March and April, how the company will counter the competitive intensity as well as the demand outlook, the raw material outlook, the pricing trends, as well as the rural recovery trends, whether there is any recovery seen in rural demand as well as the capex status. Now, the company had also given a guidance of around low double-digit volume guidance. So it has to be seen whether the company sticks to this guidance. So that's on Asian Paints, which is expected to report their results tomorrow.
Okay, thanks so much, Lisa, for that. But apart from Asian Paints, the IT major LTMindtree will also report earnings. Expectations are fairly muted because we're talking about a 1% growth in terms of constant currency. The margins are expected to dip by almost 30 basis points, and the profitability is expected to remain flat. Remember, there were higher furloughs this time around in the BFSI as well as the high-tech vertical. That might impede the revenue growth this time. However, there might be some pass-through revenues that might support it. Having said that, pass-through revenues are not very margin accretive, and that's the reason the change in the revenue mix will result in a bit of a margin decline this time. The deal wins are expected to be fairly muted at around $1.25 billion, and overall the management commentary whether they'll manage to do a high single-digit kind of revenue growth in FY24 or not will be important to track. But apart from earnings, we also have budget as the key trigger to watch out for, and the big question is as to what the government can do to give this Vikaski guarantee a thumbs up. Let's listen in to some of the demands coming in from the public as to what their budget wish list is.
Plenty. Everything that we want is for the consumer. But one of the key points that most of our developer fraternity keeps speaking as a pain point is the definition of affordable housing. We've defined affordable housing with a 60 and 90 square meter criteria, but with a 45 lakh rupee price tag. Now, if you just look at this 45 lakh rupee price tag, which was put about 5 years back, and you just kind of add inflation to it, we're talking about 70 lakhs already. We really need to define affordable housing as only and only against the size of the apartment. That would allow people and to be able to get a better life and a lifestyle. The other things could be interest cost waiver against the purchase of an apartment. Capital gains being treated like they were for a shot in the arm for the real estate industry.
We planned a affordable housing segment project with about 6,000 homes, and it was all under the PMA guideline and affordable housing. But unfortunately, for their own reasons, the government rolled back on the GST input tax credit. I think that has proved an expensive jolt for the industry as a whole, for real estate. And we've been giving our representations that we should be allowed to revert back to the earlier GST fundamental thing, that it is, input tax credit has to be allowed.
Okay, so that was the budget wish list coming in from the real estate sector. But on that note, Vineet, we let you go. Thanks so much for making time. But time now to take the BDSC ideas as well from our chartists. But seems like we have no time for that because it's last 1 minute for the trading session. And the Nifty is ending just above that 22,000 mark. A bit of a red after 4-5 days of gains. We are seeing a bit of a slide in the markets today. Sensex managed to hold to that 73,000 mark, but it's a %2 decline on the Sensex. Advanced decline ratio 2 was clearly favoring the declines today, so there was a bit of a broad-based decline that we saw across various sectors. In terms of the individual movers, it was ITC that managed to gain quite a bit of ground after GQG name appeared in that entire December shareholding. L&T, after bagging that 10 to 15,000 crore order, was also in focus. HDFC Bank also saw a bit of a perk up in the excitement ahead of its earnings. What did not do well was clearly Reliance. That was one pain point in the market, and you also had names like TCS as well as Infosys coming under pressure. Metals as a pack definitely rallied by the end of the day on account of that stimulus coming out of China, or at least the reports of that. Take a look at SAIL, that was higher by 5%. Hindustan Copper, Nalco, Jindal Stainless, Jindal Steel, these were some of the names that were gaining ground. FMCG also managed to have a decent day, all thanks to ITC as well as Dabar. On the back foot, it was real estate, apart from IT, and some of the pharma names too came under pressure. But that's how we have wrapped up the trading session. Held on to 22,000, but for now, all eyes will be on HDFC Bank, and that will decide how Nifty Bank is likely to pan out. But with that, it's a wrap on this edition of Closing Trades. From the entire team, thank you so much.